Welcome back to Investing Talk Podcast. Today we're taking a look at Baidu, specifically its upcoming earnings report. We want to help you understand, not just the raw numbers, but what's really going on underneath. What should you, our listener, be watching for? And hey, before we dive in, if you get value from these discussions, please think about subscribing, liking, maybe leaving a comment. Your support, honestly, it really helps us reach more people with this kind of analysis. Oh, and if there's a company you want us to tackle next, just pop it in the comments below. We do read them. So for today's analysis, we've pulled together insights from, quite a few analytical reports, market commentaries, the works.
Yeah, and our goal here isn't just to throw figures at you. It's really about helping you understand the bigger picture. What actually drives Baidu's performance? And crucially, what could these earnings really mean for where they're headed?
Absolutely. Understanding that narrative is key. Okay, so let's start with the basics. When is Baidu actually reporting, and what are the analysts expecting?
Okay, so the date to mark is August 20th, 2025. That's when they're set to report, and it's before the market opens, so pre-market.
Got it, August 20th.
And the analyst consensus for this quarter's earnings per share, the EPS, it's projected at $2.05 per share.
205, okay. And what about revenue? Is there a clear number people are coalescing around there?
Well, for revenue, it's a bit less precise in the immediate sources for this specific quarter.
Yeah.
There isn't one single consensus figure widely reported. But, looking at Baidu's history and the general market feel, the consensus usually clusters somewhere in the low $4 billion range.
Low fours. Okay, that gives us a ballpark. And what has Baidu itself said? Any forward guidance from their last report?
Well, in their last public summary, Baidu didn't give really detailed quarterly guidance for EPS or revenue. That's not entirely unusual. Sometimes companies hold back a bit. But they did forecast a pretty significant year-over-year decline in EPS, around minus 29.07%.
Wow, nearly 30% down year over year. That's substantial.
It is. And the management commentary around that really emphasized, quote, continued AI investments and disciplined expense management. So they're signaling pretty clearly, we're spending money on AI on the future, and that's hitting the short-term profit numbers.
Right. So it's a strategic choice, potentially, but nearly a third drop. Is that purely the AI spend, do you think, or are there other pressures maybe in their core business?
I think it's likely a mix. The AI and cloud investments are definitely heavy. They're capital intensive. But yeah, it's also happening while, there are concerns about the broader Chinese economy, maybe some softness in their traditional advertising segments too. So strategy meets reality, perhaps.
Okay, that makes sense. Now, this is where it often gets quite revealing. How has Baidu actually performed in past earnings? Do they tend to beat expectations, miss them, surprise us?
Yeah, this is interesting. Baidu has shown this pattern of kind of alternating between beats and misses. High variance, you could say, from quarter to quarter in their EPS.
Really?
Yeah,
Alternating?
Yeah. Like, take Q2 2025. They reported $2.55 EPS. The expectation was 196 cents. So boom. A massive beat, like plus 30% surprise.
Whoa.
But then the quarter before that, Q1 2025, they reported $2 EPS and the expectation was $2.58. So a miss.
So it's not just noise, it's a real swing. What does that tell us? Is it just hard to predict their business?
I think it reflects the underlying tension in the company's story, right? You've got the mature, profitable search and ad business, and then you have these huge bets on AI and cloud, which are high growth potential, but less predictable maybe.
Yeah.
And definitely costly right now. So analysts and investors are constantly trying to weigh those two sides. How much profit now versus how much growth later? That creates volatility.
Yeah, that tension makes sense. So given these swings, how does the stock typically react after the report comes out? Any patterns there?
Well, before the report, there's often this run-up. We've seen the stock price tend to climb a bit in the lead-up. It's happened in 9 of the last 12 quarters, actually, averaging about a 2.7% gain beforehand. Not huge, but consistent.
Okay, a pre-earnings drift upwards.
Exactly. Then, post-release, it can be pretty sharp. If they deliver a strong beat, you often see a 4 to 7% jump in the stock price, like on that day. But if they miss, you frequently see a 5 to 8% drop or a reversal of any run-up. The market definitely pays attention.
So clear reactions to the headline numbers. Beyond EPS, though, what other key trends have you noticed in their results that give us a deeper insight?
Well, that EPS volatility is obviously key. Another thing is operating margins. They've been under pressure, no surprise, because of all that AI and cloud spending. But interestingly, they've stayed relatively stable despite the pressure. Suggests they're managing costs carefully even while investing.
Okay, so managing to invest without margins collapsing entirely. What about users?
User growth, that's been slower. Definitely slower compared to, say, a few years ago for their core search stuff.
Hi.
And that really highlights why cloud and generative AI are now seen as the critical growth engines going forward. They need those new areas to drive expansion.
Right. It feels like a real pivot from search giant primarily to more of an AI company that also does search. So what specific things in that AI and cloud part would really signal success beyond just the top line revenue?
That's a great question. You want to look for signs of improving profitability within those segments. Are they getting closer to actually making money, not just costing money? Also, things like adoption rates for new AI products, like their Ernie platform. Are businesses actually using it? New enterprise client wins for cloud services, usage metrics for their AI tools, maybe even hints of gaining market share against rivals like Alibaba or Huawei in the cloud space. Those specifics would show the pivot is working.
Okay, that's helpful. Now, focusing on this specific quarter we're heading into, what big news or trends might have impacted Baidu's performance recently?
Well, during the quarter, they definitely kept up the pace with AI and cloud launches. Developing and pushing out their Ernie AI platform was mentioned quite a bit. That's clearly a major focus.
More AI put.
Yeah. But on the other side, there were these persistent rumors, whispers about potential new government regulations in China, targeting things like online advertising, data privacy. That kind of stuff could definitely create headwinds for their traditional ad revenue, their cash cow.
Ah, the regulatory overhang. Always a factor in China tech.
Always. And you combine that with a broader context, the whole tech sector in China has been under scrutiny, right? Plus, there's been somewhat weaker domestic consumer demand, which can dampen ad spending.
So, internal innovation push, but external pressures mounting. How does the global picture fit in? AI is hot everywhere.
Exactly. Globally, there's huge enthusiasm for AI. That's a definite tailwind for Baidu, given their focus. Investors are excited about AI potential. But that global optimism gets tempered by the specific China factors, the slower consumer spending there, maybe some currency fluctuations impacting reported earnings. It's a balancing act.
Given all that complexity, what are the analysts saying lately? Are they generally upgrading, downgrading Baidu, or is it all over the place?
It's really been a mixed bag. You see some analysts downgrading, pointing to those macro concerns in China, the regulatory uncertainty. They're playing it cautious.
Okay.
But then you have others raising price targets, focusing more on the AI monetization story, the long-term cloud potential. They're betting on the future growth. So no clear consensus trend right before this report, which honestly just reinforces that feeling of uncertainty in the different ways you could view the company right now.
Interesting. Okay, let's shift to the technical side for a moment. What is the market itself, through trading activity, telling us about expectations? You mentioned the pre-earnings run-up.
Yeah, that 2.7% average run-up is one signal.
Yeah.
But the options market gives us maybe a clearer short-term expectation.
How so?
It's pricing in what's called implied volatility. Basically, the market's best guess for how much the stock might move up or down right after the earnings. And for this quarter, the options market is implying a potential move of around plus or minus 6 to 8%.
6 to 8%. And how does that compare to usual?
Well, the historical moves after Baidu earnings have typically been in the 4 to 8% range. So 6 to 8 is definitely leaning towards the higher end of that historical pattern.
So the options market is betting on a bigger than average reaction this time, or just acknowledging the uncertainty.
Could be either or both, really.
Yeah.
It suggests traders expect a significant swing, maybe because of those conflicting narratives, the AI promise versus the macro regulatory worries.
Yeah.
It also means options are probably more expensive than usual right now, reflecting that expected volatility.
Right. The market is basically saying something's going to happen, we're just not sure what. It's bracing for impact.
Pretty much, yeah. A significant reaction seems likely, regardless of direction.
Okay, so let's pull all this together. Given the history, the environment, the AI pivot, the market signals, what are the potential scenarios? What does a bullish outcome look like versus a bearish one?
Okay, bullish case? You'd want to see them beat the consensus EPS or revenue. Maybe not by a huge amount, but a clear beat. Even better would be signs of real strength, maybe accelerating growth in that cloud and AI segment. New contracts, better adoption numbers, and definitely an upward revision to their full-year guidance would be a big positive signal from management. Oh, and if they downplay regulatory fears and show they're maintaining margins despite the spending, that's a very bullish combination.
Got it. Beat, strong AI cloud, better guidance, no bad regulatory news. What about the downside, the bearish case?
Bearish, well, obviously a miss on EPS or revenue, especially if it's a significant miss. Weak forward guidance would be a major red flag. That signals management sees trouble ahead. Also, any signs that margins are compressing more than expected, or real disappointment in cloud growth or user numbers for core services. And of course, any concrete negative regulatory news or commentary pointing to a sharp slowdown in their ad business, that would likely hit the stock hard.
Makes sense. If you had to tell our listener to focus on one thing when that report drops, the single most important metric or area, what would it be?
For Baidu right now, it has to be the cloud and AI segment, both the reported revenues for the quarter and, crucially, the forward guidance relating specifically to those areas. Given the pressures on the traditional business and the overall macro situation, AI and cloud are the story. That's where investors are looking for proof that the future growth engine is firing up. Any positive surprise there could outweigh other negatives, potentially.
Cloud and AI, that's the key battleground. Okay,
Okay.
so weighing everything, the history, the pressures, the potential, the market's nervousness, what's your overall leaning? Bullish, bearish, neutral heading into this report?
Putting it all together, our analysis points towards a neutral leaning, and honestly, with fairly low confidence in predicting the direction. Maybe a 4 out of 10 on the confidence scale.
Neutral with low confidence. Why so cautious?
It really comes down to that historical pattern of alternating beats and misses. It just makes it inherently hard to predict this specific quarter with conviction. Add to that the very real China macro and regulatory uncertainties. They loom large and could swing things either way. So while you have that tendency for a pre-earnings run-up, it's not guaranteed. And the options market pricing in that potential 6–8% move clearly signals high uncertainty, not strong directional belief. It feels like a coin toss with high stakes.
A neutral stance reflecting the genuine uncertainty. Okay. So for our listener thinking about their own portfolio, maybe they hold Baidu or considering it, any general strategy thoughts given this setup?
Yeah, for investors who are more risk-averse, sitting this one out might make sense. Avoid holding the common stock through the earnings announcement itself. That potential 6–8% swing is significant volatility. Waiting for the dust to settle after the report gives you clarity reduces that immediate event risk.
Makes sense for the cautious investor. What about those with a higher risk tolerance?
Well, for them, the elevated implied volatility could make market-neutral strategies interesting. Things like a straddle or a strangle, maybe. These are options plays where you're essentially betting on a large move happening, but you don't necessarily care if it's up or down. You profit from the volatility itself.
Betting on the size of the move, not the direction.
Exactly. Given Baidu's history of post-earnings swings and the current high implied volatility, that could be appealing, though obviously complex. And for directional traders, they'll need to watch that guidance like a hawk, especially any details on cloud and AI. That's where the first clues about the future direction will likely emerge.
Fascinating. This whole discussion really brings up a bigger question, doesn't it? How do these massive tech companies, like Baidu, juggle being at the forefront of innovation, pouring money into things like AI, while also navigating these really complex, shifting geopolitical and regulatory landscapes?
Yeah.
Maintaining investor confidence through all that. It's a huge challenge, something to really think about as we watch how this unfolds.
It absolutely is. That balancing act is critical not just for Baidu, but for many global tech players today.
Well, hopefully this analysis has given you, our listener, a clearer picture and some useful things to consider as Baidu reports. Remember, digging into the why behind the numbers, the strategy, the context, that's often more valuable than just the headline figures.
Absolutely. The more you understand all those interconnected pieces, the better equipped you are to make informed decisions and really appreciate the nuances driving the market.
Well said. Thanks for joining us on this investing talk. We will be back soon with another detailed breakdown. And please don't forget to subscribe, like, and comment. It helps us out a lot. And hey, if you feel like it, consider buying us a coffee. The link is usually somewhere below. Until next time.